So I want you to answer this honestly. If someone walked up and handed you exactly $1,000 right now, what would you do with it? Think about your usual habits for a second. Most people, they'd instantly blow it. A brand new phone, some designer clothes, maybe a quick weekend trip, and poof, just like that, it's gone in a week. They take cold hard cash and trade it for things that lose value the exact second they swipe their card.
But let's look at the brutal reality of consumer spending. On one side, you've got that $1,000 spent on a phone. Give it 5 years, and that phone is functionally obsolete. It's worth absolutely zero. But on the other side, you have $1,000 invested for your future. The gap between these two choices is literally the exact difference between staying broke forever and building life-changing wealth. And to put that into perspective, just look at this massive number, $88,000. Let that sink in for just a second. If you take that exact same $1,000 and invest it the right way at age 25, it can organically grow to over 88 grand by the time you retire. Seriously, the exact same initial $1,000. Smart investing doesn't just make you a few extra bucks, it alters the entire trajectory of your life.
Section 1. The Iron Foundation. Before you invest. Because listen to me, before we talk about where to put your money, you absolutely must do this first, or you're just building a house on a swamp. On one side, you've got credit card debt sitting at a massive 20% interest rate. On the other side, the average stock market return, which historically hovers around 7 to 10% a year. Guys, it is mathematical suicide to try and invest your way out of high-interest debt. No stock, no crypto, literally no asset consistently returns 20% year after year.
So here is your golden rule. Eliminating a 20% debt is a guaranteed 20% return. Period. End of story. If you're sitting on high-interest credit card debt right now, paying it off is your absolute best investment. Use that $1,000 to completely crush the debt first. It's the highest guaranteed return you are ever going to get.
Okay, step 2 of this Iron Foundation is a specific number, $500. You need to build a mini emergency fund of at least $500 and keep it safely locked away in something like a high-yield savings account paying around 4 or 5%. Why? Because life happens. If your car suddenly breaks down or you lose your job, you do not want to be forced to panic sell your investments at the worst possible time. This tiny safety net protects your whole empire.
Section 2. The exact $1,000 blueprint.
All right, your debt is dead, your safety net is totally set. Here is exactly how we deploy your capital like a pro to perfectly balance your risk. 50% goes into index funds, 30% into individual stocks, 15% into crypto, and a secret 5% into financial education. This 4-part master plan is engineered for maximum long-term success. So let's rapidly break down exactly where each slice goes. First up, the massive 50% core, $500. This is the absolute bedrock of your portfolio. You are taking this and putting it directly into an S&P 500 index fund. If you're in the US, you're going to use zero-commission brokers like Vanguard, Fidelity, or Charles Schwab. If you're international, just find low-cost ETFs that track global markets. An index fund automatically tracks the whole market, so it requires zero stock picking on your end. Warren Buffett himself literally recommends this because it is the ultimate long-term wealth builder. You buy it, and you leave it alone for decades. Next up is your 30% allocation, $300. This goes into strong, established individual companies. We're talking titans like Apple, Microsoft, Johnson & Johnson. Put $150 into 2 rock-solid companies with proven track records. And let me fiercely warn you right now, do not go chasing dangerous meme stocks. Do not chase some random hot tip you saw on Reddit. You want to buy real businesses that make real money.
Then we have the wild card, the 15% slice, $150 into crypto. This right here is your high-risk, high-reward play. Put $100 into Bitcoin and $50 into Ethereum. They are the most established assets in the entire space. But hear me clearly on this. The volatility here is absolutely brutal. People get filthy rich and people go entirely broke. Never ever invest more in crypto than you can stomach losing completely.
And finally, the last 5%, $50. This is your secret weapon, financial education. Go buy a foundational book. Pick up The Richest Man in Babylon, Rich Dad, Poor Dad, or The Psychology of Money. The knowledge you'll unlock from reading just one of these books yields the absolute highest long-term return on investment possible. It literally upgrades your mindset, which then protects the other $950 you just invested.
Section 3. The mathematics of wealth. Because that first $1,000, it's just the spark. This whole thing isn't about getting rich quick. It's about getting rich surely. What happens if you just add $100 a month at an 8% average return? Boom!
You hit the 10-year milestone. You've only contributed $13,000 out of your own pocket over that decade. But thanks to the magic of compound interest, your total portfolio explodes to over $20,000. Your money is literally out there making its own money.
Now let's fast forward to the 20-year mark. You've consistently put in $25,000 total, but because of massive compound growth, your portfolio hits over 60 grand. You see that? The curve is starting to steepen really aggressively now.
And here's the climactic 30-year payoff. You've invested $37,000 over 3 decades. Just $100 a month, but your portfolio is now worth over $150,000. And what if you increase that monthly $100 as your income grows over the years? The numbers become completely life-changing. I'm telling you, consistency is the single most powerful force in personal finance. It's not about perfection, it's about consistency.
Section 4. Toxic mistakes to avoid. Now look, you could follow this blueprint flawlessly, but if you fall for these toxic beginner traps, you will lose. Let's rapid fire through these fatal errors. 1. Timing the market. Stop trying to predict the highs and lows. Not even the seasoned pros can do it consistently. 2. Panic selling. We're going to dive into this in a second, but it is an absolute wealth killer. 3. Chasing hot tips. Oh, your friend's cousin made 10x on some joke coin? Ignore them. Hot tips are exactly how regular people get completely slaughtered. And 4. Waiting for the perfect time. Stop waiting. Let's circle back and talk about mistake number 2, panic selling, because the historical proof is completely undeniable. Market crashes are inevitable, guys. In 2008, the market crashed 50%. In 2020, it crashed 34%. But guess what? Both times, it fully recovered and rocketed to massive new all-time highs. The people who panicked and sold at the bottom, they lost everything. The people who stayed invested, they won massive returns.
Look, the financial industry pushes a massive lie. They desperately want you to believe that investing is impossibly complicated, filled with dense charts and wild algorithms that only they understand. And why? Because that fake complexity justifies their massive management fees. But the simple truth is exactly what we just covered. Buy index funds, invest consistently, avoid panic selling at all costs, and let time do the heavy lifting. That's it. That is the whole game.
Which honestly brings us to the biggest mistake of all. Doing nothing. The gap between the person who starts today and the person who waits grows wider every single day. $1,000 isn't a massive fortune, I get that, but it is enough to start. And starting is everything. Even if you only have $50 a month to your name, it is infinitely better than zero. The actual cost of inaction is your future freedom.
They always say the absolute best time to start investing was 10 years ago. Well, the second best time is today. You've got the exact blueprint now. You know how to build the foundation, you have the exact $1,000 split, and you know exactly which toxic mistakes will wreck you. The math is entirely on your side. So I'm going to leave you with one final life-changing question. Are you ready to start?